An ETF is basically an index fund's more flexible cousin. They do almost the same thing. Both let you invest in a bunch of companies at once instead of picking individual stocks. The difference is in how you buy them. A regular index fund you buy through a fund provider once a day at a set price. An ETF trades on the stock market in real time like a regular stock. You can buy or sell it any moment the market is open. For most people starting out, this distinction doesn't matter much. You're not day trading, you're investing for the long run. But ETFs tend to have slightly lower fees, more flexibility, and they're what you'll actually see when you open most investing apps. So when you search S&P 500 on your brokerage app and a ticker like VOO or SPY comes up, that's an ETF. Think of it this way. If an index fund is a meal plan, an ETF is the same food, but you can order it any time instead of waiting for the cafeteria to open. To sum it up, an ETF is like an index fund. You can buy and sell anytime during the trading day. Lower fees, more flexible, and it's probably what you'll actually use in practice. I've picked you the most relevant video to watch next, or pick the playlist and watch the whole series. It's your call. Please subscribe.